Hello, Marc Ostwald from ADM Investor Services International, with some thoughts on global debt levels this week, as we've had the IIF report on global debt, which didn't make for particularly comfortable reading. But before I make some observations on the various charts from the IIF and a couple of others, it is worth noting that we've had news this week also that Mr. Mnuchin, the Treasury Secretary, is basically ending some of the support for the Fed's lending programs. Some of these lending programs are definitely, have definitely been underutilized, but they were set to sunset at the end of December. It seems a little bit unnecessary to end them prematurely. And as a signal, and this is important in the context of global debt, it doesn't really send much of a comforting signal to markets still facing a lot of uncertainty, regardless of whether we have a magic wand of a vaccine coming our way. But by the by, the IIF report this week, as my first chart shows that overall debt volumes to GDP ratios have risen very, very, very sharply. We are up to $272 trillion. In percentage terms, that's a rise for developing economies from 380% at the end of 2019 to a whopping 432% at the end of this year, or at the current stage at the end of Q3. These are spectacular rises, as that chart highlights. Even more spectacular, one would have to say, is the second chart, which looks at projections for global debt up to 2030, and that suggests that global debt will rise from that 272 trillion level up to $360 trillion. So debt is increasingly becoming a problem, and I think the issue here is not that we need to try and restrain it now, but that it's going to place an enormous amount of burden on the global economy, simply because it will have to be serviced. And even if interest rate service costs are low, the fact of the matter is that at some stage we are going to have to deal with the fact that some of this is going to have to be written off. We've already had our first default in sub-Saharan Africa this year, and there are a number of African countries facing a lot of challenges as we go forward. And the measures which are being taken by the G20 are probably not quick enough and not large enough, basically, to stave off further problems coming over the next few years. But this isn't just a problem which is limited to the emerging world, or even the developed world. And as my third chart highlights, actually, it's been quite interesting to have a look at overall debt levels growth and where it's come. That third chart, basically by country, by major economy, highlighting, perhaps surprisingly for some, that it's Canada and Japan who have seen the sharpest rise. To a certain extent, that is deceiving, simply because they actually had quite low levels in relative terms beforehand. So that's probably slightly exaggerating, but it really does emphasize that a lot of the debt has been growing in the developing world economies. For my fourth chart today,
4 minutes.
we've got an interesting chart on the cost of servicing debt relative to government revenues. And what it highlights is just how challenging this is going to prove to be for emerging market economies, despite most of them being able to lower their debt servicing costs. This has risen very sharply and is expected to continue to rise. In the developed world, it's fallen thanks to those near zero levels of interest rates and likely to stay there. Finally, we've got a chart on US corporate zombification. Corporate zombification is described as being the situation where debt servicing costs are not covered by revenues. It's some would argue whether that's justifiable. They prefer to see something of a measure like debt to enterprise value, but enterprise value is arbitrary. But the important thing is what we've seen is a very sharp rise, and those corporate zombies at some stage will have to be dealt with, and it won't just be a question of better growth allowing their revenues to grow and then putting them out of the zombie category. So plenty to think about in terms of global debt this week.